Hello, good evening, and welcome to Using Candlesticks in Binary Options Trading. During this webinar, you will learn the basic concept of a candlestick chart, different candlestick patterns, and learn more about binary options trading strategies. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own signal service and website. I host online webinars and seminars on investment and financial trading regularly. And I provide my service to subscribers worldwide. But more on that later. So let's start the session now on candlesticks. Candlesticks are one of the most misunderstood aspects of Forex trading. I will teach you today how to interpret them properly. You are not required to memorize anything. Instead, I am going to show you how you can understand market situations simply by looking at a pair trading chart. Candlestick analysis is how you gather evidence to support your trading decisions. And once you understand how to properly interpret candlesticks, you will be able to enter and exit the market with pinpoint accuracy. First, you should look at the big picture. What is the current market trend? Where are the major support and resistance levels? These are examples of questions that will give you a rough idea of where the market is headed. Just in case you are new to candlesticks, here is a quick introduction. Candlesticks are graphical representations of market price movements within a specified time period. A candlestick may represent price movement that occurred in the last 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, 1 month, for example. This is what a candlestick looks like. The thick portion is known as the real body. And the thin parts are known as shadows. Body, shadow. Body, and shadows. Now let's see what the real body and shadow can tell us about how market prices have moved. Remember, each candlestick represents a specific time period. Let's assume the candlestick here represents price movement in a 1 hour period. The open would be the market price at the beginning of the hour. The close is the market price at the end of the hour. The high and low are the highest and lowest prices that were traded within that 1 hour. Most trading platforms today will allow you the option to change the color of the candlestick you see on your chart. So it doesn't really matter. Let's use green to represent a bullish candlestick and red to represent a bearish candlestick. A bullish candlestick represents market prices, this one to the left, and the market prices that moving up. If you look at the 1 hour candlestick, like this example, you will see that the close, the end, is higher than the open beginning. This means that in that 1 hour, the market has moved from the open price to the close price. And now here is a bearish candlestick. Notice that a bearish candlestick is the opposite of a bullish candlestick. It shows how prices have moved down within the time frame that the candlestick represents. Bearish candlesticks are usually represented by the color red. Occasionally, you will come across candlesticks that have no shadows or have no real body. These are very special candlesticks that can provide you with information about where market price may be headed. And I will discuss more about this special candlesticks. The power of momentum is potentially the most important concept in candlestick analysis. If there is only one thing you can learn from candlestick analysis, I recommend that you learn about how to read momentum. So what's the momentum? Momentum is essentially a measure of how strong price movement is. Try to answer this question. Which of these candlesticks show a stronger upward price movement? 1 or 2? Using what you have just learned about how to read candlesticks, take a moment to think about your answer. Did you guess candlestick 2? If you did, so it's good job. So why does candlestick 2 show stronger uptrend momentum? Although both candlesticks have the same high, low price range, candlestick 2 shows no hesitation in upward price movement. Also, candlestick shows a higher closing price. Here's an example of how prices moved. Can you see how candlestick 2 shows the price moving straight up? This is an indication of a strong upward momentum. Candlestick 2 is often called a bullish shaving candle. The opposite of a bullish shaving candle is called a bearish shaving candle. But how does understanding price momentum help you make money in trading? Let's now look at an example of how shaving candles can help you. Here we see a bearish shaving candle that is soon followed by a further drop in prices. But why are shaving candles so accurate in predicting the direction of future prices? The answer is because shaving candles indicate strong momentum in price movements. In the bearish shaving example, there was no shadow because the sellers in the market completely overwhelmed the buyers. The buyers could not drive the price up at all. The sellers were too strong. At once the buyers are temporarily defeated, prices will continue to free fall until the buyers can regain their strength and start pushing prices back up again. Are shaving candles 100% accurate in predicting future price movement? The answer is no. It is no. because if it did, then all traders would be rich by now. Sometimes shaving candles are immediately followed by price moving in the opposite direction, as it's often the case during the release of certain economic news announcements. Actually, all types of technical analysis, including candlestick analysis, is likely to be ineffective during the high impact news releases. So don't trade during these periods. Shaving candles are not the only indicators of strong momentum in the market. There are several other ways to identify the strength of market price movements. However, shaving candles are one of the most reliable indicators. But as with all other trading indicators and analysis tools, you should never rely solely on candlestick analysis to trade. This means that you should not just blindly enter into a buy trade the moment you see a bullish shaving candle. Candlesticks analysis is meant only to be one criteria out of the many trading criteria you should have in your own trading system. Use candlestick analysis together with your technical indicators or trading method. If you see bullish shaving candle, but your other technical indicators tell you not to enter into a buy trade, then don't buy. Now, I will discuss about markets with weakening momentum. When momentum is lost, when momentum is strong in the market, it's a good time to enter into a trade. But when do you exit the trade? The answer is when that momentum begins to slow down. And as you might have guessed, the candlestick that best shows the lack of momentum is the doji. On the trading charts, a doji looks like a cross because the open price is the same as the close price. Therefore, this candlestick has no really body at all. A doji can represent either one of two things. Buyers and sellers are equally strong or indecision in the market. When the buyers and sellers of the market are fighting each other, prices may not fluctuate much. This is because both sides are equally strong at that point in time and are caught in a deadlock. However, the moment one of the sides starts to lose strength, the other side will usually push price strongly in their direction. So it could be up or down. Second point, indecision in the market. Sometimes when the market is behaving unpredictably, traders in the market don't know whether to buy or sell. This results in a doji candlestick on the chart because neither buyers nor sellers are strong. They are both weak. This is the opposite of the point one. So how to trade using a doji candlestick? Actually, many forex books and websites claim that a doji candlestick indicates a change in market direction. Now that you understand that the reasons for the formation of a doji, do you agree with what these books and websites say? The answer is not necessarily, right? Whether or not a doji indicates a possible change in market direction depends on the reason for the formation of the doji. For example, decision in the market is unlikely to cause a change in market direction. We buyers or sellers will not be able to push price in any direction at all. As a summary, you should know that long shaving candles signify strong price momentum in the market, and that strong momentum is a good indicator of the direction of future price movement. You also now know that a good time to exit your in the money trade is when loss of momentum is observed in the market. A doji signifies a loss in momentum, although this doesn't mean that prices will definitely reverse in the opposite direction. So never try to predict trend reversals and enter the market based on a single doji candlestick. One more thing about the doji before we move on, you may have noticed that the hammer and hanging man candlestick have similar characteristics to it. So for trading practical purposes, just treat them in the same way you would treat a doji. Let's move into the next important candle characteristics, long shadows. Along the top shadow means that the buyers in the market try to push prices up, but the sellers were strong enough to push prices back down again. Along bottom shadow means that the sellers in the market try to push prices down, but the buyers were strong enough to push prices back up again. Long shadows represent buyer seller rejection. Here is an example. We entered into a buy trade a few days ago, and the market has been on an uptrend. We are currently in the money. Suddenly, we see a long top shadow right at the top of the market. Do you see how fast the price dropped? As you can see, long shadows serve as an indicator of the comparative strength between the buyers and the sellers. They indicate a high chance of market prices going in the opposite direction of the shadow. One more thing, the longer the shadow, the more likely prices will move in the opposite direction of the shadow. Now, let's talk about multiple shadows. Unlike a single long shadow, the presence of multiple shadows usually indicates the weakening of support or resistance levels, while a single long shadow indicates a likelihood of prices moving in the opposite direction of the shadow. A cluster of multiple shadows indicate that prices are likely to move in the same direction as the shadow. Let's look at this example. Here we see multiple shadows trying to penetrate a support level. Also note that the closing prices are getting lower and lower. What this means is that the sellers are aggressively testing the strength of the support level. In instances like this, the buyers are looking weak. I would expect the sellers to overpower the buyers soon. And you could see like this sharp movements. Rejection candles don't always signal a reversal, so you need to know how to tell when a rejection has failed and how to react accordingly. The best way to understand this is through an example. Here we see the market moving down. The latest candle shows a long bottom shadow, indicating seller rejection. This may be a good time to enter a buy trade. Let's see what happens next. 3 candles later, we see that prices have not continued to move up. This means that the rejection signal has failed. When this happens, prices are highly likely to keep moving in the same direction. In this case, down. It would just be a good idea to exit any buy trades and sell instead. What happens next? Prices continue to drop and a nice profit is made. As a rule of thumb, reverse rejection occurs when price close halfway or more of the long shadow of the rejection. This is a simple but deeply effective method for minimizing losses and getting onto the right side of the market. The important thing here is to understand the reason behind the concepts you have just learned. This may take some time to get used to, but keep at it and it will soon become easy to you. All right, this wraps up this section. Let's now move on to the more exciting part, binary options trading strategies. And in the next webinar, we will learn in more details how to use and understand relative candlesticks, reverse candlestick, psychology, reading price action, exclusive formation, the time frame principle, and more. And trading binaries strategies are important as they are designed to help traders to maximize their profit taking ability. Apart from having proper risk management, traders also need to understand how to stretch their investment capital further to come out ahead of the game. I will discuss today some of the various binary option strategies which traders can adopt to maximize their capital. The double red strategy is one of the easiest strategies that a trader can adopt with a candlestick chart. The idea is to wait for 2 red bars with the second bar closing below the first one. This normally signals the beginning of a new trend. By placing a down option or call option, traders tend to gain from any further drop in the prices. The rejection strategy for 15 minutes candlesticks. I wanted to share with you one of these price action strategies. Essentially, what we are looking for in this particular strategy and example is a drop in price after heavy upward momentum in which a bar breaks and closes below the last green bar. I mean this one. Once this occurs, we wait for a pullback and for price to get rejected, the first green candle to be rejected at the start of the candle, which was had shifted the momentum by closing below the last green bar. The green bar closed here, and this one closed here. Once we see that, then we will wait for three green bars in 15 minutes charts. And then when we see this three green bars rejected around that area, the fourth bar, we would be taking a downward option immediately as soon as the candle opens, as this is our opportunity to get in at a higher probability drop area. So trend, then break, then rejections or three candles rejected under this level, and we place our order or buy option with opening of this candle. The strategy is one of good strategies in use today in trading binary options, although the setup itself can be difficult. The way that it ultimately works is by placing rise and fall option on the same asset. You would want to place a fall as high as you possibly could on the asset, and then when the market drops, you would place a rise option in the opposite direction as it returns back up. This allows you to always have at least one trade expiring in the money between these two lines in this section, so that you will either take a minimal loss or gain a huge reward for landing both trades for a large sum. Advantage for this strategy is it limits risk and offers a high reward if the trades both land in the money. Disadvantage is hard to find the right setup unless the markets are very volatile. Crossover trading strategy with TCI indicator. The strategy uses two indicators to generate trading signals during an established trend. Here, trend is downward. By comparing a sensitive oscillator against a long-term simple moving average, it generates clean signal for short-term market movements in the same direction of the trend. Its chief advantage is that it avoids the confusion of multiple indicator strategies where there is more chance of divergence and generates more signal. The trade-off is reduced clarity, meaning that it's best for frequent low volume trades. How the trading strategy works, the basic of the trading system is to take advantage of the short-term fluctuations in a long-term trend. It's designed to work in short time frame with binary options that expire in matter of minutes because it generates more signal than other strategies. It's suited for a trader who places a lot of orders during a trading session. The system was first designed by scalping traders in stock and currencies who look for quick moments, often as short as a couple of minutes, to trade and make lots of trades during the session. To use this strategy to trade binary options, you need to have charting software, which allows you to add common indicators. What you are looking for is a long-term trend often easier to identify in 15 minutes or 1 hour chart. In the charting window, add simple moving average, this line, or SMA that tracks the trend you have established in the higher time frame chart. Since the ideal time frame for trading this strategy is in the minute chart, 1 minute chart. That means you should be tracking the trend in an hour chart. So the simple moving average should calculate for 60 periods. The second indicator is the commodity channel index indicator, which is added to the bottom of the chart at the standard 14, 14 periods. CCI is one of the more sensitive oscillators and helps measure short-term movement in comparison to the SMA 60. The question now is when to trade. What you are looking for are moments when the chart touches or crosses over the SMA, let's say in this point. This usually means that the correction is finally running out of steam. The CCI is used to confirm the correction is over. There are basically three scenarios that can develop where you would want to trade. First, the market just touches the SMA here like this, but the candle closes below it. In this case, wait until the next candle closes and check the CCI. It's closed now, we check the CCI. If it's within the 100 to minus 100, this two dotted lines, then it's a signal to enter the market. For sure, in the direction of the trend here, downtrend. So we place here. Second scenario is if the market crosses over the SMA, like here, here, here. Then wait until it crosses back and closes below. Check to make sure that CCI is between the 100 and the minus 100 range. And that's a signal to enter the market. And again in direction of the trend. If neither of those scenarios develops, then hold off on trading. About questions, I will, by the end of the session, I will give you time to ask questions if anything is not clear. The purpose of the system is to generate lots of trading signals for traders who want to get into the market often. But with low exposure, in other words, it's for traders who want to take a lot of small positions and make consistent profits through the law of averages. For more example, in the chart, there are 5 full options signaled in just under a couple of hours. I will revise strategy again, so if you can understand it. This candle touched and closed above, so we are waiting till it closes below SMA period 60. Then we will look at CCI 14. If it's between 100 and minus 100, these two lines, so we will enter or make option. Here it just touches and then closed under the line of moving average. So we'll wait till second candle to close. We looked at CCI within the range of 100 minus 100. So we placed trade or unit option in the direction of the trend. This one closed above, we till it closed under, looked at CCI between 100 minus 100. So we place our trade closed above. So we wait till it closed under the line of SMA. We looked here at CCI between 100 minus 100. So we place our trade in direction of the trend. And now binary option strategy with Bollinger Bands and ADX indicator. It's one of the best binary options trading strategies with expiry of few minutes between 2 and 4. It is a retest on Bollinger Bands with ADX indicator. Bollinger Band, ADX. The strategy shows a series of impressive achievements. So let's see how to use it. You must first analyze a Japanese candlestick chart with time frame of 60 seconds, 1 minute. Then you need to select an asset and associate to it the Bollinger Bands with input 22 front weighted. Now you must add the ADX oscillator. At this point, it should be expected that the level of the price goes to make a retest on Bollinger Bands and invest to rebound with a maturity of 2 minutes. So if the level of the price touches the lower Bollinger Band, like all of these arrows shows examples, you will invest upward for 2 minutes expire. And when it touches the band Bollinger higher, you have to invest downwards. Every blue arrow in this images is a profitable investment. But what does the EDX indicator? It's used to delimit the area where you can trade. Since we are looking for a cross market, it's necessary that the ADX is below 30. Here I draw line. And also it can be better below 30, below 20. In the images, you can see the incredible number of successes you can get in one trading section. The number of profitable investment is always much higher than the number of incorrect investments. It's a strategy that we see generally applied every morning from 8 to 11 GMT and always with a great success. Surely, it's a great way to make trading with binary options. So repeat it again. We have here Bollinger Band in the chart, 1 minute chart. Here is EDX. And we will wait till the candle touch either one of bands of Bollinger Bands. If it's lower band, so we will look at EDX if it's lower than 30 or 20. So we will have like here, we will buy option, rise option or up option for expiry of 2 minutes, means 2 candles from touching of the bands here, 2 minutes here, 2 minutes here, 2 minutes here. As you can see, we have here gray zones, that we should not make any trades because the ADX is above the 30 or 29. As financial traders, we should also bear in mind that as simple as it may be to trade binaries, being successful still requires us to master some trading strategy. There are many binary option strategies, but we only have to adopt those that suit our individual trading style. And now, if anybody have any question, write to me, please. They ask for strategy for 1 minute and 5 minutes. Last strategies are 4 minutes. Again, settings of moving average 16. Yeah, and I repeat again, the two silver lines placed in CCI indicator is 100 and minus 100. I think it's clear. Are there any other questions? Know that you are going to be rewarded for taking the time to be with us here tonight. All those who attended and who have never claimed a webinar bonus in the past will get a free $20 bonus to try out the strategies demonstrated during this webinar. If you are eligible for the bonus, you will be contacted directly by email within 2 working days. So to request information on my pre and advanced webinars, please go to my website, eg-academy.webs.com, the egbinary.webs.com. You can contact me directly. My email address is gmail.com. So then I would like to thank you for attending today's webinar. We will hold the following webinar on 29th of May. So please stay posted on my web pages or the pages of binary.com and hope to see you on my next webinar. And meanwhile, if anyone will think of any question later, please don't hesitate to contact me through my email. I will be more than happy to answer all of your questions. So goodbye and see you next time. Have a great evening. Bye bye.